What if I told you that some of the biggest fortunes in the world aren't made in the stock market, but behind closed doors, in exclusive investment deals that most people never hear about? Welcome to the world of private equity, a secretive, high-stakes investment strategy that turns millions into billions. Today we're diving deep into what private equity really is, how the ultra-wealthy use it to build massive wealth, and how you can start thinking like a private equity investor. By the end of this video, you'll have a crystal clear understanding of how private equity works and why it's one of the most powerful wealth-building tools on the planet. Let's get started. So, what exactly is private equity? Private equity is a form of investment where wealthy individuals, institutional investors, and firms buy, invest in, and restructure private businesses to create massive returns. Unlike traditional investing in public stocks, private equity focuses on direct ownership, meaning investors take a hands-on role in improving and growing the businesses they acquire. Private equity firms pool money from high-net-worth individuals, pension funds, and institutional investors to buy entire companies, improve their operations, and then sell them for a huge profit, typically within 5 to 10 years. This isn't just investing, it's business transformation at the highest level. Now let's get into the real question. How do the wealthy actually invest in private equity? Here's how it works. Private equity funds. Investors pool their money into a private equity fund, which is managed by top-tier investment professionals. These funds target businesses with huge growth potential, restructure them, and then sell them at a massive profit. Direct buyouts. The wealthiest investors and private equity firms buy entire companies, revamp operations, and either sell them or take them public for huge gains. This is called a leveraged buyout, or LBO. Venture capital. Some private equity firms invest in early-stage startups, helping to fund the next generation of billion-dollar companies like Uber, Airbnb, and SpaceX. Distressed asset investing. The ultra-rich also buy struggling companies, turn them around, and sell them for a massive return. Think of what Warren Buffett does with undervalued businesses. That's a form of private equity investing. Secondary market investing. Some investors buy existing private equity fund stakes from others looking to cash out early, allowing them to enter the game at a discount. Now, let's break down where private equity firms put their money. These firms aren't just gambling, they strategically invest in businesses that have the highest potential for growth and value creation. Here are the top areas where private equity firms invest. Technology and software, the hottest sector for private equity. Firms invest in SaaS, cybersecurity, and automation tools that scale fast. Healthcare and biotech. Private equity firms acquire hospitals, pharmaceutical companies, and biotech startups that are pioneering medical breakthroughs. Real estate and infrastructure. Large private equity firms invest in commercial real estate, logistics centers, and data centers, turning them into multi-billion-dollar assets. Retail and consumer brands. Private equity firms take struggling but well-known brands, optimize their business, and sell them for huge profits. Energy and sustainability. Investing in renewable energy, oil and gas, and sustainable projects is a major focus for private equity firms looking to capitalize on global energy needs. Financial services. Private equity firms buy and optimize insurance companies, fintech startups, and investment firms, turning them into financial powerhouses. Logistics and supply chain. In the age of global commerce, private equity firms buy shipping, warehousing, and supply chain companies to streamline operations and drive profits. So, how does private equity turn investments into billions? Here's the strategy. Buy undervalued companies. Private equity firms target businesses that are struggling, underperforming, or undervalued. Optimize and restructure. They streamline operations, cut unnecessary costs, improve leadership, and introduce new growth strategies. Leverage debt to maximize returns. Private equity firms use leveraged buyouts to acquire companies with borrowed money, increasing the potential return on investment. Grow, scale, and sell. After 5 to 10 years, the firm either sells the business for a massive profit or takes it public through an IPO. Example: private equity firm Blackstone bought Hilton Hotels for $26 billion, improved operations, and later sold it for a $14 billion profit. So, what are the biggest lessons from private equity? Private equity is a hands-on, high-stakes investment strategy where the wealthy buy, restructure, and sell companies for massive profits. The rich invest through private equity funds, direct buyouts, venture capital, and distressed asset investing. Private equity firms focus on industries with high growth potential: tech, real estate, healthcare, and financial services. Success in private equity comes from buying low, optimizing businesses, leveraging debt, and selling high. While private equity is reserved for the ultra-wealthy, you can still apply its principles. Invest in undervalued assets, optimize them, and grow your wealth. This isn't just about rich people, it's about learning the strategies that build real wealth. Now, I want to hear from you. If you had $100 million to invest, where would you put it? Drop a comment below. And if this video helped you understand private equity, hit that like button, subscribe for more, and share this with someone who needs to hear it. Until next time, invest like the wealthy and build your empire.